Hello everyone and welcome back to my YouTube channel. My name is Pankaj and I'm a financial investing advisor. If you had invested $10,000 at the beginning of 2024 with Nvidia, it would have been worth over $18,000 in just 3 months. Artificial intelligence is just now starting to impact jobs and it's going to continue to expand and grow over the next decade. That's why the latest projections have the compounding annual growth rate for AI to be around 37% each year for a decade. Now that level of growth can't be true for every company that's tied to AI, but there is an opportunity for making massive investment gains. It's better now than it's been in years. Meta just announced that they are going to spend several billion dollars in 2024 to purchase 350,000 Nvidia GPUs to build a new level of open sourced AI. And that level of investment is just the tip of the iceberg, which means that there is going to be plenty of investment opportunities for the rest of us in the AI sector. And one of the easiest ways to invest broadly in AI is through exchange traded funds or ETFs. So in today's video, I will cover the best AI ETF charged for growth over the next decade. And I will share this based on their past performance since I tend to leverage history as a strong guide for my own investments. So please watch this video until the end. Let's get started. Thank you again for joining me today. As always, everything shared in this video is for informational purposes only. But if we hit that like button below, that would be a huge contribution in the growth of this channel going forward. Now, I will move on to the first ETF today. The first ETF is QRAFT AI Enhanced US Large Cap Momentum ETF with the ticker symbol AMOM, where this is a fund that breaks away from the others and then it leverages an AI model for its security selection based on a historical algorithm of performance where it limits any single security from exceeding 10% weight. And clearly, it's doing something right because when you look at the top 10 holdings, it has companies like Nvidia, Apple, and Microsoft that we all would expect, the high tech growth companies. But even companies like Eli Lilly that have been in the news a lot for leveraging AI, that's also part of its holding. Now, when we shift over to look at the performance of AMOM, the performance is good with 37% for the last year and 55% since its inception in 2019. And when it comes to the expense ratio, it does happen to be the highest of all of the ETFs that I'm going to talk about is around 0.75%. But something to consider is that AMOM had the lowest worst year performance of any other ETF, meaning that it has a little more stability in its return. The second ETF now that I'm going to talk about is Invesco Semiconductors ETF with ticker symbol PSI, which, as the name suggests, invest in semiconductor industry. And if you aren't aware, those happen to be the chips in the brain, which are used across all electronic devices. An item that I like about this ETF is that it focuses solely on US companies to provide a domestic exposure to its investment. They focus primarily on the small and the medium cap funds that have a little bit more volatility, but they also have more room for growth. When it comes to holdings, it has the top player with Nvidia and Micron. But I love that some of the top companies include AMD, Intel, and Qualcomm because those are some of the lesser spoken about companies so far that I believe they will have a great 2024 year. They have some extra room to grow given that memory prices are expected to climb this year considering the demand. And with Microsoft ending its support for Windows 10, that forces a lot of people to upgrade to Windows 11 and that makes the demand for memory growth, where that makes companies like Micron a force function of growth. As for performance, the PSI ETF had a good set of returns over the past 1, 3, and 5 years, where it happened to have a small dividend with somewhat of a moderate expense ratio, and it is telling that it has a lot of small and medium cap companies with extreme swing in its best and its worst performance years. This is a fund that I am willing to give a consideration, seeing as how it focuses more on the domestic and smaller cap companies. The next fund is Invesco QQQ Trust Fund. The ticker symbol is QQQ. And given its popularity, I think most of you are all aware of this fund as it invests in the Nasdaq's top large cap companies. Now, before I jump into the holdings, I do want to point out that this fund is nearly identical to the QQQM, or it's often referred to as QQQ Mini, where the Mini trades at a lower price and it has a smaller expense ratio due to how it reinvests dividends and other actions to offset its fees. The QQQ Trust Fund has more history than Mini. Both are equally great, but if you are interested, the Mini does have a lower expense ratio of 0.15% compared to 0.2% of QQQ. So let's take a minute to look at the holdings where QQQ shines, with the top holdings with the Magnificent 7. And it's still a great fund. When you look at the dividend and its expense ratio, it isn't in the top or at the bottom, it's in the mid range. Now I will move on to the next fund, which is Fidelity MSCI Information Technology Index Fund with the ticker symbol FTEC. As for the FT's fund performance, is mostly in the middle of the pack, but with those returns, it is doing extremely well, especially at the 5-year mark with 152% return. And I do need to point out that this fund has the lowest expense ratio of the group with just 0.08%. The next fund I'm going to talk about is from iShares. Its ticker symbol is IETC, iShares US Tech Independence Focused ETF. This ETF is an actively managed fund that isn't bound solely to the tech sector, where it includes a few different top companies like Accenture, which has to be a consulting group that is hyper focused on directing companies how to implement AI strategies and automation across a broad range of areas and sectors. The reality is that most companies have no idea where to begin with AI, and consulting firms like Accenture will be a driving force for companies that are willing to make that level of investment. As for the IETC performance, it had a great return at the year 1 with 51%, and it's consistently beat the S&P 500 at each of the other different time frames. My next fund and the last fund for today is IGM. It's iShares Expanded Tech Sector ETF. This ETF happens to invest in more than 250 tech companies like Meta, Microsoft, and many more. They all are doing big in AI. They should only continue to grow moving forward. As for the IGM performance, it's off to a great start year to date, where it has crushed the S&P 500. But I will share that its 5-year performance is the lowest among all of today's fund that I have been talking, and it also has one of the lowest dividend of the group. But most tech companies don't even offer dividends because they happen to reinvest them back into the company. And I think most of us agree that it happens to show in the growth of the stock price. So these are the 6 different funds that I wanted to share and talk about. I'll continue adding a few more AI related ETFs in my upcoming videos. Let me know in the comment section which is your favorite ETF and if you would like to know more about any specific ETF. If you found this information valuable, don't forget to like, share and subscribe for more financial insights. Until next time, happy investing.